Good morning, good afternoon, and good evening to everybody around the world. It is Monday, the 9th of February. This is the HODLNOTS weekly warm-up. I'm John,
I'm Vicky.
and let's get into some of the crypto headlines that have been making news from all over the world now.
Yes, crypto.com, who is an exchange and also a credit card, they placed a $70 million bet on AI.com domain ahead of the Super Bowl. So the Super Bowl was Sunday, just passed, and congratulations, Seattle Seahawks. They won over the Patriots, New England Patriots. So I'm a couple of people on the call that might have been watching that. But anyway, just in time to create a Super Bowl ad, Crypto.com made history by buying the priciest domain in history. They bought AI.com for $70 million, according to the Financial Times. So the deal, paid entirely in cryptocurrency to an unknown seller, shatters previous records. Wouldn't you like to have got AI.com back in the day and had $70 million worth now? But Crypto.com debuted the site during Sunday's big game, offering consumers a personal AI agent for messaging, app usage, and stock trading. They said if you take a long-term view, 10 to 20 years, AI is going to be one of the greatest technological waves of our lifetime. So there you go, $70 million for a website domain name. Mm.
Absolutely, and well done, Seahawks, on that Super Bowl win. Now let's get into some theories. Now, Vicky and I have been saying this for quite a while now, is trade what you see, right? There's no guarantee anything will go anywhere, but it's a matter of time. But for the moment, we're trading what we see, right? Now, here are a couple of theories as to why Bitcoin crashed. No, we have spoken over the last couple of months. We know that a couple of original whales that bought Bitcoin back in 2014, 2015, or even earlier, super cheap and sold off. There were a few other things as well. Here are a couple of others that may well have been, or may have led, or been partly the reason why Bitcoin's crash. That said, we have no control over that. We do have control over what we do. Right, absolutely. Trade what you see. So let's have a look at some of these interesting theories. One popular theory suggests that Bitcoin's crash this past week may have originated in Asia, where some Hong Kong hedge funds were placing substantial leverage bets that Bitcoin would continue to rise. Now, these funds use options linked to Bitcoin ETFs like BlackRock's IBIT and paid for those bets by borrowing cheap Japanese yen. They swapped that yen into other currencies, invested in risky assets like crypto, hoping prices would rise. Now, when Bitcoin stopped going up and yen borrowing costs increased, those leverage bets quickly went bad. Lenders then demanded more cash, forcing the funds to sell Bitcoin and other assets quickly, which exacerbated the price drop. Now, another theory that has been gaining traction comes from former BitMEX CEO Arthur Hayes. He suggests that banks, including Morgan Stanley, may have been forced to sell Bitcoin or related assets to hedge their exposure in structured notes tied to spot Bitcoin ETFs, again, such as BlackRock's IBIT. When Bitcoin was falling sharply, breaching key levels like around that 78,700, 7,500, or 75,000 at least, in one noted Morgan Stanley product, dealers must delta hedge by selling these underlying Bitcoin or their futures. Now, this creates something called negative gamma, meaning that as prices drop further, hedging sales accelerate, turning banks from liquidity providers into forced sellers and also exacerbating the downturn. Now, there's another theory, less prominent, but also circulating, is that so-called mining exodus. Now we're talking about Bitcoin mining, and there's a story coming up a little later, may have also fueled the Bitcoin downtrend. Now, in a post on X on Saturday, analyst Judge Gibson said that the growing AI data center demand, which we well know ties in with the lead story that Vicky was talking about, AI is on the upwards trend, is forcing Bitcoin miners to pivot, which has led to a 10 to 40% drop in hash rate. Now, for instance, in December last year, 2025, Bitcoin miner Riot Platforms announced its shift towards a broader data center strategy while selling $161 million worth of Bitcoin. Now, last week, another miner, IREN, announced its pivot to AI data centers as well. So, ladies and gents, these are some of the theories going around. Again, whatever the theory, whatever the cause, we have no control. We trade what we see, and we're the ones who have control of ourselves and of decisions that we make. Anyway, over to you, Vex.
Exactly. Trade what you see. I mean, how many times have we heard this or that never came true? We'll never know. So trade what you see. But in other news, Tether, which is USDT, adds 31 million users while crypto loses one third of its market value. So Tether's USDT stablecoin reached a market capitalization of 187.3 billion, adding 35.2 million users to reach a cumulative user base of 534.5 million users. So despite challenges in the broader market, Tether's total reserves rose to 192 billion, and the company added 82 billion of US treasuries, ranking as the seventh largest purchaser globally. So Tether has scaled back its fundraising target to around 5 billion though, after investor pushback on a proposed 500 billion valuation. And their CEO stated that Tether does not urgently need outside capital and talks about fundraising remain early with no final decision made or the size or timing. So at least Tether is, well, stable at the moment and looks like it's growing in users.
All right, so we have spoken about various countries as well, and other entities creating stable coins as a means of trading, or payment solutions. We look at Central Southern America as well as this. So hence the demand for stable coins. Meanwhile, China is now banning some of them as well. But more on that perhaps next week. For now, let's go ahead on over to South Korea where, whoops, it sounds like they made another mistake again. We did see that previously some of the Bitcoin funds that were captured from illicit activities, and there was an investigation that got breached. Now, a South Korean crypto exchange has accidentally given away $43 billion worth of Bitcoin. Now, South Korean crypto exchange accidentally credited users with billions of dollars worth of Bitcoin last week, triggering a flash crash in the platform's listed value of the token. How did it happen? Instead of airdropping users 2001, that's the local currency for South Korea, which is roughly about $1.37 at the time of writing, the exchange, Bithumb, reportedly sent 2,000 Bitcoin a piece, users have said. That massive sum was worth some $142 million with Bitcoin trading back then at 71,000 when the issue was first disclosed. Not your keys, not your crypto, right? Ties in with a little story a little later, but that said, even the exchanges can make mistakes. Please double check all of those values when you are transferring funds or even withdrawing. But more on that later. Back to you, Vix.
Yes, I wonder how did they get it back? I want to know the rest of the story, actually. So let's follow that one up. In other news, though, and in the first story, John hinted around this Bitcoin mining difficulty. So the Bitcoin miners have actually had their biggest drop since the 2021 China ban. So the historic drop signals a dual crisis of extreme weather, actually, this time, constraints and deepening economic pressure on network operators. So, unlike the geopolitical shocks of 2021 with China, the current decline is driven by a collision of meteorological instability and thinning profit margins. The sharp contraction follows severe winter storms across North America in late January, which disrupted energy grids serving major mining clusters. In jurisdictions such as Texas, miners participate in demand response programs. These operators voluntarily reduce their power consumption during peak load periods to help stabilize grid in exchange for energy credits. So, however, the magnitude of this 11% drop suggested more than just a temporary curtailment. It points to economic capitulation. So, the severe weather stressed the electrical infrastructure, spiking spot power prices. For operators running older, less efficient hardware, the surge in operating expenses likely pushed profitability into negative territory. This financial strain led to a permanent or semi-permanent shutdown of rigs. So for context, estimated Bitcoin miner, so there's a person or people called Marathon Digital. They spent approximately $67,700 to mine a single Bitcoin in the third quarter of 2025. So with Bitcoin now trading below 70, well, just about above 70 now, but several miners are operating at a loss even before accounting for other general expenses. So the miners are doing it tough at the moment, and we're going to have to watch that story, I think.
Absolutely, and hence why in the previous story as well, why a lot of these Bitcoin miners and institutions and collaborations are actually turning to other alternate sources
Mm.
because yeah, that hash rate is incredibly tough at the moment. Now, speaking of tough, obviously, the last couple of forever years, actually the last couple of weeks, ever since Bitcoin broke down key levels, especially the 100,000. And we revisited a few 95 or so a couple of weeks ago, testing that 75,000 support, which broke, and now back at, it was at 60. Um, Google's search volume for the word crypto hovers near a yearly low amid the market rout. Now, crypto investor sentiment has fallen to levels last seen during 2022 with the Terra or Luna collapse as weak prices and volumes weigh on market confidence. Now, Google worldwide search volume for crypto, or the word crypto, is hovering near one-year lows, reflecting weak investor sentiment amid a broad market downturn that reduced the total market capitalization of crypto from an all-time high of 4.2 to $2.4 trillion. A worldwide search for crypto is 30 out of 10 at the time of this writing, with a reading of 100 obviously indicating the highest level of search interest, which was reached last in August of 2025, in parallel with market capitalization high. The 12-month low of all time is 24, or at least within the last 24 months, 12 months, is the number 24, according to Google Trends data. Now, in the same vein, while the word crypto is in its lowest search pattern ever, the Google search volume for the word Bitcoin has surged over the past week as the asset's price briefly fell to the $60,000 level for the first time since October of 2024. Now, Google Trends provisional data shows worldwide searches for Bitcoin reaching a score of 100 for the week starting on February 1st, the highest level in the past 12 months. Bit of an inverse relationship there. Now, the previous peak was a score of 95 in the week of November 16 to 23rd last year, when Bitcoin slipped below that psychological value of 100,000 for the first time in nearly 6 months. Now, Google search interest is one of the several commonly used indicators among crypto analysts to gauge retail interest, that's us, in Bitcoin and the broader crypto market, which typically spikes during significant price moves, particularly major rallies to new all-time highs, or like we've experienced recently, sudden sell-offs. Now, some market observers suggest that the current price range may be drawing renewed attention from a broader retail interest and the audience. Now, Bitwise head of Europe, Andrei Dragos, said in a post on Saturday, retail is coming back. Meanwhile, CryptoQuant's head of research, Julio Moreno, said in a post on X on Saturday that US investors are now buying Bitcoin after it reached that $60,000 mark. The Coinbase premium is now positive for the first time since mid-January, said Moreno. So, it is interesting. We've spoken about the fear and crypto greed index, in terms of, when people are buying, um, you know, when there's a lot of greed in the market, perhaps it's not the time to add to your positions. But, when everyone's selling, when there's fear, maybe one should. Not financial advice. Remember, we trade what we see, but hitting severe and serious support levels like 60,000. And funny enough, if you watched or you attended last week's, we showed you that 60,000 was probably going to be the next spot. But again, we trade what we see. It broke down below 75,000 and there is interest renewed again. Obviously, a lot of fear. People like, oh, Bitcoin is never coming back, etc., etc. Anything could happen. It could well break below the 60,000 and hit 49.50. Who knows? But there is some interest again around Bitcoin, and perhaps retail is coming back. If you have the funds, not financial advice, some people might be adding. We're going to have a look at Bitcoin shortly, and we'll be looking at the HODL fire indicator on the day chart. And there's something interesting to see there as well. But for now, Vicky, back to you.
Yeah, there's a lot of mixed signals, I suppose, in the crypto market, some positive, some negative. And Gemini's been in the news. So Gemini is an exchange really based in the US. And they are not being immune to really the global what's happening at the moment. There's so many companies slashing their workforce, and Gemini is one of them. So Gemini is going to slash their workforce, and they are exiting Australia as well, which they actually just entered. So Gemini is founded by, as we know, Cameron and Tyler Winklevoss, and they are planning to reduce their global workforce by around 200 people. So that represents about 25% of their staff, and it's part of a broader cost-cutting effort. The company said the layoffs will affect employees across multiple regions, including Europe, the United States, and Singapore, and obviously a big one in Australia. So, alongside the job cuts, Gemini has approved plans to wind down operations in the United Kingdom, the European Union, other European jurisdictions, and Australia, narrowing its geographic footprint to the US and Singapore. So the exchange said that these changes are intended to lower operating expenses and accelerate a path to profitability despite ongoing weakness in the crypto market. So Gemini expects the restructuring process, including workforce reductions and regional exits, to be largely completed by the first half of 2026, subject to local legal and consultation requirements. The company estimates it will incur approximately 11 million US in pre-tax restructuring and related charges, with most costs expected to be recognized in the first quarter. So, like most of the companies around the world, they are sizing down. So it's really just part and parcel in the world at the moment, unfortunately.
Yeah, absolutely. There will be some pivots, there'll be some turnaround points as well. Now, coming back to a quickly becoming quite a regular little segment, and that is security. Now, we've spoken about this, and there are obviously going to be overlaps regarding some of these stories and references to previous ones as well. But we've spoken about range attacks, we've spoken about poisoning as well, and this is one of those such stories. So we have covered this, in, I think, last week or the week before. Now, dress poisoning, what is that? Well, it recently cost two victims over $62 million alone. Just one victim lost $12.2 million in January by copying the wrong address from their transaction history. This is the story we referred to in an address poisoning attack, according to a similar $50 million attack in December, according to Scam Snuffer. Now, if you might remember, if you have never heard of this, this is what it is. Address poisoning is when attackers send small transactions or dust from addresses that look very similar to those in the target's transaction history, hoping that the victim will copy the wrong address. Now, Scam Sniffer added that signature phishing also surged recently with a $6.27 million stolen from 4,741 victims total in January, a 207% increase compared to December. Now, address poisoning, according to Scam Sniffer, address poisoning is one of the most consistent ways large amounts of crypto get lost. This is also from Web3 antivirus. Now, some of the largest address poisoning losses it tracked over time range from $4 million to $126 million. Recent incidents show this trend isn't slowing down. Now, just as a reminder for what address poisoning is, they explained that address poisoners generate full addresses that match the same first and last few characters you see, but the middle is different, so it looks identical. So no longer would you look at the first three or four numbers and digits and then the last few as well, because people can pretty much replicate that except for a couple of differences in the middle. So ladies and gents, not your keys, not your crypto. Please make doubly sure. We've spoken about evil twin Wi-Fi networks. Please make sure that you're on a secure network. And now you're going to have to double check that all those transaction histories, all those addresses, if you're transferring from one exchange to another, what it might be, please make sure that the full address is correct, especially for those of you trading or sending larger amounts, but it goes for anybody and everybody, whether you're trying to send $10 or $10 million, please double check. All right. Security is tantamount. Back to you.
Yes, and this next story is also kind of about security, and I'm wondering if it's the same CEO that sent accidentally that all that money to the people in Korea. It's not, but South Korea is not having a great time. I wonder what's in the water over there at the moment, because South Korea jails crypto CEO in first ever case under new virtual asset law. So the CEO of South Korean crypto asset management firm has been sentenced to 3 years in prison for manipulating cryptocurrency and earning illicit profits. The court found that CEO used the automated trading program to infiltrate trading volumes and engage in wash trades, resulting in a significant increase in the trading volume of the ACE cryptocurrency, ACE. So this case is the first enforcement under South Korea's Virtual Asset User Protection Act, highlighting the country's efforts to crack down on crypto market abuse. So hopefully that's a test case that shows other people that countries are getting serious about security, and we shall see.
All right, moving on for the
Yep.
crypto news. Let's have a look at that little diagram, that little needle not pointing in the best direction, but is it? Vicky, tell us more.
Well, yeah, interesting. So the fear and greed index had quite a wild ride this last week, and it dipped down to a low of 5. And that happened as Bitcoin kind of hurdled towards 60. And the 5 is actually the lowest since the FTX collapse. And the FTX collapse was actually only an 8. And it was also lower than what you mentioned before, which was the Terra Luna crash, and that was 6. So it's actually lower than both of those at the moment. Now, today it's sitting around 14 with a slight recovery in the market. And however, if you tuned into our happy hour hangout, which John was alluding to, this could signal turning around because when everyone is greedy, be fearful, and when everyone is fearful, be greedy. So it is very low. So there's lots of people that are saying this is a great time to buy. Now, as you know, we say see it and trade it. So John is just about to show you what the market is showing, and let's just see if it is the right time to buy or not.
Absolutely. All right, let's get into this. Having a quick look at Bitcoin here. So, we have spoken about key levels before, and what you see on your screens right now is having a look at the Bitcoin day chart. This is obviously including the HODLNOTS indicator, which is made up of many indicators that show confluence in terms of trends and momentum of those trends. But that said, if you don't have the training, we know there are plenty of HODLNOTS on this call at the moment, but I see a bunch of you as well who aren't potentially yet. But that's it. We trade what we see, right? So let's just do this for a moment and just have a look at just what this is showing us. Now, we have touched on previous support levels as well. Now, we've drawn these lines in, and this is all based on material that we teach in our HODL Fire course. But that said, a lot of it is actually playing out almost to a T. So what I'm going to do just for a brief moment, I'm going to bring this on to play just so we can have a look at this. Now, in our broadcast last week, we had a look at Bitcoin on the week chart. This is on the day chart right now, and you can see it's in a definite downtrend, but it is starting to make some headway. We are trying to, or Bitcoin itself is trying to regain some of these key support levels as shown here, but it's needing to get past some certain indicators first. So let's have a look at the week chart and just have a look at the slightly bigger picture. Things not ideal. So HODLNOTS, it's on the incorrect side of something we call the mountain. Not ideal on the week charts. We had a look at it last week's candle and had already crossed over the week just prior to that. At the moment is finding some key support. However, if it does break down below that 60,000, we did touch on the fact that 58 might potentially be another one. But let's just have a look at one larger out zoom on this. And this is where our guesstimation around that 60,000 value came into play. If you see some previous historic levels back in April of 2024, March as well, May, and some general consensus. So again, looking at the bigger picture, Vicky, it's not too bad in terms of where Bitcoin has started and where it currently is. Still general bigger adoption. And it's going to have these weeks and months, which seem like years, where there is going to be like this downward trend. But the reason why the Fear and Greed Index, hitting that all-time low, is because of the biggest drop in history for Bitcoin over a period of time. But will it turn around? Well, it does need to hold this key support level of 60,000. We do believe that 58 perhaps, but we are looking at around that 48, 49 region here as being the next key. But we don't really want it to go down there because it just means that the general market goes down lower. And for long-term holders, it's even more agonizing. We get that potential some buy-in areas maybe later. But for the moment, is this the turnaround point? Well, let's have a look at the neon green HODL fire and what is it telling us. So let's just have a quick look, and we're just going to do that for a sec. There we go. We've got a pivot bottom and a buy tag on the very same candle, which would have come in on Sunday. That would have been yesterday. Fantastic news. That is a really strong positive indication. But as mentioned, it's got a few things that needs to get past. We do know that there is a bunch of sellers sitting around 72,000. What was previous strong support, 75. And despite the fact that there is a CME futures gap at around 84,000, in order for it to really take off from there, we're going to have to really break past this zone here. And again, we were hovering around for a longest period of time, around that 92, 93. So for the moment, in terms of outlook for the rest of the week, in terms of volatility, if we do see some movement up past this area here and we start to reach up here for this week, the alts are probably going to have a little bit more freedom. But that said, there are a couple that are really moving nicely. And last week, Friday, we had a call with the HODL Fire graduates, and we spoke about such coins like AWE, DCR, Kites, and GPS, funny enough, which are all running. So there are from a HODL Fire perspective, and then obviously scalp trading, left, right, and center. We know that these coins, DF, ACA, Data, NKN, all being delisted along with Chess on the 13th, but they are providing some really great scalping opportunities. So despite the volatility, Vicky, I think that there are some coins that don't really care what Bitcoin is doing. And there is some great opportunity to make, whether it be 1%, 5%, 10%, or more per day, depending on what you're looking to trade. But expect some volatility as Bitcoin tries to hold that region there of about 70,000, break up towards 73 for the rest of the week.
Yeah, it's actually really good trading at the moment for the scalpers because we saw, I mean, Bitcoin's gone that far. So we can be scalping all these coins that are running and also hodl firing shorter hodl fires, let's say. So the 1 hour, even maybe 15-minute chart. If you have done the HODLNOTS foundational course, 15-minute chart or even less would be great for the hodl fire. But if not, 1 hour is okay. But scalping really is the way to go at the moment. And where do you scalp? You scalp in the lodge and the den. So the calls for this week are fairly similar. Or usual as well. So right after this one today, we have the 12 p.m. UTC call for those who are doing the self-paced course and on chapters 1 to 3. So if you are on chapters 1 to 3 doing the self-paced course, please jump on and ask the questions. No better time to learn than at the moment. So that follows, or that will be followed by another self-paced call actually Tuesday morning at 4 a.m. UTC. And that's for anyone on any chapter. So a little bit of a different time zone. If you do have a question, please jump on then. So 4 a.m. UTC on Tuesday. And then in the lodge, we do have our regularly scheduled lodge call at 6:30 a.m. UTC. I think it was supposed to be 6, could have moved. Let me have a look. If you're not sure, it will be on the calendar in the Certified Academy. And Wendy always does some great topics on those calls. So if you are in the lodge, jump on and learn about how to trade in this market, scalp trade, shorter hodl fires, but mainly scalp trading, I think, because as John just showed, there's lots of little coins running at the moment. And then that will be followed again on Tuesday by our our graduate HODL Fire call. So anyone who has done the HODL Fire course and is in the graduate chat, we have a special call at 12 p.m. UTC this Tuesday. And really looking forward to that because, like John said, we had about 5 calls or 5 coins Friday, actually, that all ran. So we've been watching the chat, and quite a few members actually were in those trades. So congratulations on that. So that's really super fun. And then on Wednesday, we have the first of the HODL dot call. So that'll be 8 p.m. UTC on Wednesday. So if you are in the 3M challenge, so that's when you take, for those who don't know what it is, you take $40 and turn it into $2,500 through scalping. So that challenge has some calls, and you can jump on the calls and you can ask questions and maybe even have a trade or two. And that is actually on the 11th on 8 p.m. UTC. And then, oopsie, so, lost calendar. There we go. Okay, and then that will be followed on Thursday by the second of the HODL dot calls at 7 a.m. UTC, and that will be hosted by our very own John, just there, or there, where am I pointing? So just John, and that he is hosting that, and it's always good to get just to listen to different people and be able to ask different people questions. And that's again at Thursday, 7 a.m. UTC. And then that will be followed by our last call of the week, which is 12 p.m. UTC. And that is for our self-paced course takers who are on chapters 4 onwards. So we do try to split them up because lots of different questions for whatever module or chapter you're on. Now that is the HODLNOTS world. Now Bitcoin Turner Forecast does have another call, and it's actually the BTAF token call, and that will be at 6 a.m. UTC this Thursday, the 12th. So if you are a BTAF token holder or want to be, jump on that and learn what's happening in the world of BTAF token. Had a look at the chart, so it's holding up. And then on Thursday or on Friday, Marius does his long-term report, either a video or a live call. So jump on that and see where the market is going long-term so you can scalp it along the way. So that
Yeah.
is what's happening in the lodge this week. So
Yeah.
fairly normal.
Well, in the lodge, in HODLNOTS, and obviously greater Bitcoin trading forecast as
Right.
well. Plenty of opportunities, ladies and gents, to ask questions, whether you're learning to HODLFire, whether you're learning about the self-paced course, whether you are part of the 3M, and so much more. Now, that said, too much, so much more. Is this the last week? Or is next week the last week of this call? Well, not the call, but the contest. All right, because we have been running this. We're in the 5th week now. There is an image related to a week, well, story from last week as well. Hopefully, you've been taking notes. Maybe next week will be the day when we ask you to submit your entries, right? Maybe. Maybe it is. Standing the chance to win a one-on-one training session with either myself or Vicky. So please join us next week, Monday, for that. Otherwise, we'll see you during the week on any of the live calls for HODLNOTS. But that said, what is the last thought you leaving us with this week, Vicky?
Well, yes, in light of the market downturn, let's say, some of our portfolios are looking a little bit weaker, let's say, than they were a couple of months ago or definitely last year. So just remember when all of your bills say outstanding, just think what a great job you're doing with them. It's outstanding.
Fantastic. Well, for that said, please, ladies and gents, be safe. Look after yourselves. Make sure you have stop losses in place and stuff as well as you are trading. Until sometime this week. Catch you later. Until next week. Ciao, ciao. Bye bye.